The Altman Z-Score. In this video, I'll discuss the score, why it's important, and how it can be used in FMP and Google Sheets for analysis. Okay, first, let's look at the Altman Z-Score. The Altman Z-Score is a formula for determining whether a company, notably in the manufacturing space, is headed for bankruptcy. The formula takes into account profitability, leverage, liquidity, solvency, and activity ratios. A score close to 0 suggests a company might be headed for bankruptcy, while a score closer to 3 suggests a company is in solid financial position. This was discovered by NYU Stern School of Business finance professor Edward Altman in 1967. It was first published in 1968, and over the years, he's reevaluated it, made it better. The score looks like this. Also wanted to discuss this article from the American Bankruptcy Institute Journal from 2013. This is by Sherbo and Smith, and I'll save you all of the boring details and go right down to the bottom. Has the Altman Z-Score stood the test of time? In their view, yes, it has. So in their analysis, it was beneficial for determining the financial health and future of a company, and if they may or may not go bankrupt. So let's go back to Google Sheets and open a new sheet, and we'll start with our variable cell, center it, 12, order, and we'll make it blue. Okay, this is the Altman Z-Score, center that. Here we will pull from FMP, go index, FMP quote, call back to A1, 1 year, close parentheses, index, 2, Apple Incorporated. All right, 3 through 5, we're going to save. Next, we need our formula. We'll go back here, grab this, just drop that right there, and that's good there. Okay, next we need to bring in all of our financial data to fill this formula out. I'll just drop that in to save time. We're going to use trailing 12 months for the most accurate information. Okay, first we need our balance sheet. So we'll go equals, transpose, FMP balance sheet, A1, comma, 4, comma, quarters, close parentheses, hit OK. Got our balance sheet info. Okay, first we need current assets. So we'll go equals total current assets. And we're going to make all of these money and remove unnecessary decimal places. Okay, next we need current liabilities. We'll grab that also from the balance sheet. It's total current liabilities. So with that, we need working capital, which looking at our formula equals current assets minus current liabilities. Okay, got our working capital. Next, we need total assets. So we'll go equals total assets. For our A, we're going to go equals working capital divided by total assets. And we get this number. We can shrink this down, clean it up. There we go. We need retained earnings. We'll also take from the balance sheet. And we need total assets again. We'll just go equals to B10. Those into dollars, remove decimals. Okay, and for this we need retained earnings over total assets. There we go, 0.02. Next, we need our EBIT. And for that, we're going to need the income statement. Put that over here, and we can just grab and borrow from this cell, paste it over, change this to income statement, and make that A1. Okay, there's our income statement, and we need a TTM column, equals sum, grab those, hit OK. Okay, next we need our EBIT in our income statement. For that, we'll take from income before interest and taxes. Total assets, we can take from B10. And for our C, we'll go equals EBIT divide total assets. Okay, next we need our market cap. For that, we can use this space up here. We need shares. Prefer the 200-day simple moving average, and that'll give us the true market cap. We could pull the market cap as is, but I find that using the 200-day gives you a much more accurate assessment of the company, which helps kind of smooth out any wild swings in the market. So for shares, pull that from FMP. We'll say equals index FMP quote back to A1 for 1 year. We're indexing second row, 21st column. Okay, there's our total shares outstanding. Same thing for the 200-day. We can copy and paste this formula over because we can reuse it from the quote. Say A1, and in this case, we want this 21 to be 12. Okay, and this is money. We can center these. Gives us, we multiply them together, our true market cap. Okay, there, back to our formula, equals market cap. And we'll go equals total liabilities. Okay, for our D, we need market value of equity divided by total liabilities. Okay, last one. For this, we need revenue. Pull this from our income statement. We'll do trailing 12 months. And again, we'll grab our B10 for total assets. E will go equals revenue divided by total assets. Okay, so that's everything we need. Now we can calculate our score. And for that, we got to go equals sum. And we'll go to our A, timesing that by 1.2, comma, we need our B times 1.4, comma, C times 3.3, comma, D times 0.6. Lastly, our E times 1. Close parentheses, hit OK. So this gives us an Altman Z-score for Apple of 7.8. So we can next add a chart that helps us determine if this is good or bad. So we'll go up here into J2, call this the distress zone, next the gray zone, and then the safe zone. So the distress zone is when Z is less than 0.8. The gray zone is between 0.8 and 3. And the safe zone is when our Z-score is greater than 3. And we can make these red, center them all, make them bold. Our gray zone will make orange, our safe zone green. Okay, next we can make a signal. That will collapse these cells, and we'll collapse these. And in this cell, we'll go equals our Z-score, center it, make it 14 and bold. And then we can change our conditional formatting to say if the score is less than or equal to 1.8, then turn red. We'll add another. For this, we'll go, the value is between 0.8 and 3. For that, we'll turn orange. Add another rule. And here we'll say value is greater than 3. We'll make that green. Here we'll say if C3 greater than 3, then buy, and if not, sell. Once again, we'll go conditional formatting and say if text is exactly buy, turn green. If it's sell, turn red. And I'll make that 14. And lastly, we can show grid lines, turn them off. Okay, now what this is saying for Apple is Apple has a score of 7.8, which means it is in the safe zone. If a score is between 1.8 and 3, it's in the gray zone. It doesn't necessarily mean it's going to go bankrupt, but they could be in danger. And then if the score is less than 1.8, then this company that you're looking at is in danger of bankruptcy. So as you can see, this could be useful in making the decision to buy a certain company. If they have a high Altman Z-score, you can be pretty sure that they're not going to go bankrupt in the next few years. It could also be useful in shorting stocks if you see them in the distress zone. Could also be good for buying or determining bond qualities. So now let's give our spreadsheet a test. We'll head over to some high volume names. Now it's supposed to be manufacturing companies, but just for fun, let's see Bed Bath & Beyond. Okay, 3.8. We'll go AMD. Okay, very nice. AMC. Sure, why not? It's a sell. Carnival Cruise. Nope. How about Ford? Ford. Interesting. Okay. Amazon. Okay, nice. And Snap. Nice. All right, that's it. I hope this was helpful. If you have any questions or if you want to see anything else, let me know in the comments or shoot me a message. But I appreciate it. Thanks. Bye.